when investors come to Blackstone and, they say, hey, I want to look at infrastructure, but, they have equity portfolios and everything else. Why is it important that people allocate 6% to this asset class?
So if you look at infrastructure, I sort of coined this silly acronym for the characteristics of it. I say RDIY. So returns, diversification, inflation protection, and yield. First, the R, so returns. If you look at infrastructure, it has generated double-digit returns over the last 20 years with 40% less volatility than the market. The second piece, the D, which is diversification, the correlation of infrastructure to other asset classes, so the propensity for it to move up and down at the same time, is much lower than people expect. And then at the last piece, the two other, the I and Y of DIY, the inflation protection, that's really unique to infrastructure. So these infrastructure businesses have explicit inflation escalators in their contracts. And so if you had to generalize, inflation tends to be good for infrastructure, which is not true of other asset classes. And then at the same time, it has generated a very consistent 3 to 4% yield.